Hey everyone, this episode is brought to you by River, the place that I personally go to securely invest in Bitcoin with confidence and with zero fees. And now with Bitcoin interest on cash, you can even earn daily Bitcoin interest on your cash balance.
That is a capital gains harvest. And they're not going to pick up any tax for doing that. They're still within the 0% federal window, 0% state. They bought Bitcoin at $55,000. It's $85,000 today. And to sell the $55,000 Bitcoin, buy it back for $85,000. That just improved my basis and future tax situation by that much for free.
We had a pretty fun experience together out in Jackson. We were skiing and we just happened to be fortunate enough to be out skiing with a couple of Olympians, but
Yeah.
I don't know how you felt after this. And we'll talk about this quickly and jump right into the content. But this is like too cool of an experience to not talk about.
Yeah.
This was nuts to me. So I had skied as a kid and, really haven't skied all that much as an adult. And, we were at a conference. There were some people that were like Olympic skiers, and we just happened to be able to spend the day with them on the mountain. And I don't know about you, but like how I felt after I was done, I told my wife, I said, I feel like I played Russian roulette and won and like made it out of the day alive and didn't kill myself. Like, I don't know how you felt, but I was pressing my comfort.
Yeah. For the record, I was on the Preston side of keeping up with the Olympians. I was not, one of the Olympians. And the things these guys were doing were just completely humbling, right? I was pushing myself to my max and they were skiing the same mountain backwards, just relaxing. It's quite an endeavor, try to keep up with them. And an experience that I will remember for years to come.
Forever. I remember I called my dad afterwards and was like, you're not going to believe this experience I just had. But it was miraculous. Like, we were moving out. Like how I didn't kill myself that day. Wow.
Yeah.
It was crazy.
And it's a tough mountain, right? Jackson is, we're talking to one of them. They said, favorite in the whole world. He's essentially everything.
Yeah.
Congratulations. You made it out.
I kept looking over at you because I knew you were kind of at a similar skill level as me, but wow, that was crazy.
Yeah.
Hey, so you went to a traditional finance conference after this ski adventure we had. Talk to us about this. Like, what was your takeaway?
Yeah. So I had a bit of back-to-back. I did the ski conference and then I got to go to Austin for the South by Southwest Bitcoin takeover, which is a largely Bitcoin audience, lots of signal and probably names you've had on the show before. And then right after that, went to one of the more well-known TradFi conferences. And it was the complete opposite from a signal standpoint. So I got delayed in the flight, but as soon as I landed, got in the conference, I learned that Michael Saylor was speaking at it. I was like, I've got to catch this. What does Michael Saylor have to say to the traditional finance audience? Got to the stage and seats were a third, maybe half packed, right? Most people attending other events, and Saylor is describing what he's up to with releasing and arbitraging new products, essentially adding volatility to his stock, right? And this is breaking the minds of traditional financial advisors. I got to have conversations with them afterwards, and they're like, this is reckless. This is a complete scam. He's going to blow everyone up, and we need to steer well clear of this. And I'd say the general consensus amongst traditional financial advisors is 8, 9 out of 10, like, do not go near Bitcoin. Don't touch it. Don't talk about it.
What was the general take at the conference with the current administration and everything that they're doing from like the strategic Bitcoin reserve? Is any of that being talked about, or is it still just looked at as being this real novelty, weird, he's placating his voters kind of thing?
If anything, it's the second. I would say most people, it's not even on their radar. If you brought up the strategic Bitcoin reserve, it's the what? Didn't make it to their news feeds. And then if it did, it's like, that's cute. He's probably placating to some audience and, making some voting constituency happy with a promise, but not taking it as a serious asset. And we just maybe rewind a little bit to what I get to do day in and day out. I help lead Sound Advisory, which is Unchained sister company, right? Unchained does Bitcoin products. Sound Advisory does wealth management, financial planning for Bitcoiners. And so it's very common for me to see someone who is 50% of their net worth, 80, 90% plus of their net worth already in Bitcoin and using multi-sig key control. before they ever even get to us. And then so hopping from that type of Bitcoiner to the traditional financial advisor, there is just a giant gap in knowledge between the two. And I got to see them back to back, like one conference to another. And it made me realize like we are still so early. There were many conversations I had with advisors. They could not believe the niche that we serve, right? Like, oh, that's very interesting. You've got people that are that crazy or, off the deep end. And for us, it's a serious market that needs help. So yeah, just the juxtaposition, it got me thinking like, this is still very, very early. We're not even, used to say second inning. Like, I don't think we're even in the bleachers yet. Game hasn't even started.
Yeah. Well, I'm curious, what are they talking about?
The conference is called Future Proof. It prides itself on being innovative, right? We're headed to the future. All of these new things are happening. And I think the most innovative thing that they talked about was maybe adding AI to record their meeting notes, which is, the Bitcoin content. I mean, Saylor was poking at it. He was very explicit, like, hey, we are adding volatility to this situation. That makes a traditional 60-40 stock bond advisor just cringe. Like, you're doing what? Their phones were ringing off the hook because of a 10% correction in the S&P 500.
Yeah.
And so an average investor can't stomach a lot of volatility. And it's something that a lot of advisors shy away from. And so the most common question I got was, I hear all this talk from Bitcoin believers that it's a store of value. Not for me, not for my clients. They're nervous in a 10% correction. And that's a Tuesday in Bitcoin, right? And so I'm trying to help reframe some of those conversations to educate advisors. Like, okay, we store value, but it's over 20 years, right? It's not a tomorrow store of value. And I think often as Bitcoiners, we're so deep down the rabbit hole that we've like carved ourselves into a rut with our language and, things that we say that are just common to us. Most recent one I've been hearing is the Overton window. Like a regular person doesn't know what kind of window you're talking about. Is it like a style or brand? We've got a lot of bridging to do. I mean, there's over $1 trillion represented amongst those advisors and what they're managing, right? Billions and billions of dollars in one shop and 1,500 people at the conference. And they're they're on the cutting edge of innovation, yet avoiding Bitcoin, taking it seriously. Or I did see a lot of this too. There's so much ego that goes into being an advisor. You have to be right. You have to have a good knowledge and understanding about money. And if you change something fundamental, like, oh, well, I think money is something different now, you're not only wrong to yourself, you have to go explain yourself to 100+ clients. And so it's an ego death, right? That if you're going to be an advisor who starts to take Bitcoin seriously, you have to not only change how you approach finance, but you're doing that on behalf of your clients as well. And so I think we've got a long way to go. It's an industry that I think thinks it's on the cutting edge of innovation, yet they're ignoring something that's often a cornerstone asset for at least my clients' financial lives.
Yeah. And you know what? If you go to business school, or let's say you majored in finance or whatever, they truly define risk as volatility. So when you'd have a guy like Saylor on stage saying, well, I'm basically taking Bitcoin's volatility and I'm bottling it up and turning it into a product for fast money on Wall Street, I'm sure they're just looking at this and be like, this is a madman. What the world's he doing? What's he talking about? And to even begin to understand it, you first have to like understand the core thesis of Bitcoin, which I don't think I hate using the word any, but very few even understand that, let alone the building financialization on top of it.
On top of, I think is a great word, because the way I've tried to create a metaphor out of this is like they have a financial belief structure, right? The way they view creating plans and talking about allocations. And the base of that is the what is money question, right? It's like a Jenga tower. And if you start pulling for those low blocks, right, like I'm going to change what is money in your mind and what it could be and how it might be broken, it just makes the whole structure crumbly. And there's an instinctual reaction. Nope, don't touch that question. Like that is, and you can tell them, look, Fed printed 3 trillion one night. There's the bottom, March 2020, right? Watch it go straight up. Everything, gas, beef, groceries, Bitcoin, gold. Did all those assets get better March 21st? No. So a Bitcoiner is very intuitive. Money's broken. Money is better now with Bitcoin. And a traditional financial advisor just struggles with that low Jenga piece. And there's a cringe when you go for pulling at it. Not that one. So yeah.
It's so commonplace in our community, the Bitcoin community, to talk about how like the real hurdle rate is basically like global M2 that you should be trying to outperform. But I think in traditional finance, I don't even think that idea or that concept is something that they would, first of all, agree with.
Mhm.
Second of all, they'd be like, where's this number that this M2 number? Like, what are you talking about?
Yeah.
Like, it's not even.
I would agree with that. I would say inflation to a Bitcoiner is the expansion of the money supply. Right?
Yeah.
More currency units. Inflation to traditional financial advice is CPI, right?
Whatever
Price.
government tells you.
Yeah. So that becomes their hurdle rate. They quoted at 3, we got to outperform 3. S&P does a good job. It's kind of like they're monetized, it's like a token, right? Like, okay, you go into S&P as like a baseline to outperform CPI over the long term.
Yeah. It's wild to me how far, like you said it, we're like still in the bleachers. National anthem hasn't even played yet. What helps people start figuring it out? Is it just pure price action? Is it Bitcoin going to 500,000 and more people just questioning the narrative, or what?
Yeah. I've seen a lot of people start and continue their Bitcoin journeys over the years, and you can't replace curiosity, right? And so sometimes, and Price does a very good job of instigating curiosity, right? You have a 10x on anything. It's like, whoa, why did that happen? And that can start the digging for some people, and they land at different conclusions, or they start like an alt, coin phase early in the journey. But it's got to be curiosity. And I've started to communicate with advisors that are curious. Like, I can't make you a believer in this, or I can't make you understand it. I can give you the information, but you have to, if it's going to be something that you believe, do the proof of work and get there yourself. And so there are, unfortunately, some advisors are like sitting on a golden goose of a 60-40 stock bond practice, have, hundreds of millions of AUM, and they're just not interested in doing much more work. They're going to continue to ride that easy, cruise control type of practice. And that's unfortunate. I think if I had a message to clients is, you got an advisor like that, like what are you paying them for? Like what's going on there? So
Truly.
Yeah, I think curiosity is something you can't replace, can't teach, and it starts everyone's journey.
The thing that continues to just boggle my mind, and it's boggled my mind for years and years, is everybody that's gone to business school, everybody that's a financial manager, they know that you control the volatility, quote unquote, risk with position size. And so, right, like, but it seems like when you look at Bitcoin and you look at its performance and you say, well, why don't you own 1 or 2%? You even have BlackRock now coming saying they think it's appropriate for a 2% position. This was literally in Bloomberg probably 2 months ago, or I think before Christmas, that there was a Bloomberg article that came out, and BlackRock thinks that a 2% position size in Bitcoin is responsible. Has large cap financial companies like BlackRock saying these types of things, do you think that that's slowly starting to make an impact, or is it still just kind of...
Yeah, keyword slowly, right? Out of the 50, 60 advisors I talked to, I'd say like 3, are curious and starting to open the door in a reasonable way. Let's put another 10 in, okay, I could consider that, but which Bitcoin, right? Like they still got the blockchain altcoin, lack of understanding there. Most advisors don't want to have to apologize for something, right? And so if they stick their neck out for anything, even a 1-2% idea, and they got to explain to the client why they're putting it in a portfolio, and then it goes down by half or to 0, they'd just rather not do it at all. If what I'm doing works well enough to keep the client happy and not calling, and I have to meet with them 2 times a year, continue to collect my 1%, that's the apathy that I think exists.
One other current event topic that I would love to cover before we get into some of the top questions you get as a retirement planning expert. Did you see this stuff with NVIDIA that came out this week with all the robots and the AI? And you haven't seen this?
No, not the new stuff.
Well, so NVIDIA just comes out, and I mean, they are just going to town on providing GPUs and software interface for basically pushing robotics at a pace that's like humanoid robots at a pace that I think is way faster than anybody's anticipating, to the point where I'm hearing trials in factories this year, maybe even home testing, just developmental testing this year, and then maybe even by next year, some initial prototypes going into homes.
Wow.
They're able to accelerate the learning through simulated environments that like 10x the speed at which the robots can learn, the way that they're moving, the battery technology, like all of that stuff. And I'm just looking at it and I'm saying to myself, I can't even imagine how deflationary this is going to be from a technology standpoint in the coming 5 years.
Yeah.
The amount of fiat printing that's going to have to be conducted to offset the technological inflation that this is causing.
Yeah.
Dislocation and like all these other things. And I'm just like, I'm watching all this NVIDIA. Maybe it's because I've, put a lot of this into my Twitter feed that I'm seeing a lot of it. It's maybe more.
Well, that makes sense and breaks my mind at the same time, right? Because if you imagine where we were at with Chat GPT 2 years ago, it's like, okay, well, this is kind of cute in a tool and look what it can do. And now I'm seeing regular people like use it as a necessary tool in their workflows now. I'm like, oh, you can't get rid of ChatGPT, but I'm reliant on it. And that was the software side. And now you're talking about hardware and like, mechanical engineering and like, okay, well, if you take the growth of what's happening in software, and you showed me in Jackson, like watch me speak Korean. I don't know how to speak Korean at all, but here, I'm going to have some Michael Saylor commentary, and it's going to take all of that content, change how my lips move. And then you gave it to your friend who was fluent in Korean. He said, it's perfect. Right.
Yeah.
And the software combining with the hardware, I can't even imagine how much the world's going to change. And you said, I've got to live 10, 20, hopefully 30 more years. Like where does it all go? And it touches on that Jeff Booth idea. Like it's going to create so much productivity, which is going to cause the deflation. And that's the kryptonite to the fiat system, right? And so,
yes,
what's the next?
This is what the TradeFi. If I had a big gripe, this is the thing that I don't think all those people in the room that you were there at this conference understand is that the technological deflation is an exponential curve, and it builds. And this goes to Jeff Booth's thesis that so many Bitcoiners talk about as like the 50th fold of the piece of paper gets you from the surface to the sun because it's exponential. And when I'm just looking around at AI and I'm looking at robotics and I'm saying the amount of printing that they have to do to offset this is just miraculous. It's out of our comprehension just within 5 years. And I just want to be able to scream it to the rooftops of traditional finance. Like, wake up. You have to see this. Like, there's going to be able to, mask this any other way than just printing like tons of more, monetary.
Yeah. And that was really when I started taking Bitcoin seriously in clients' financial lives, right? When they, in March 2020, created those new currency units to expand the system, you had something to point to. I was in a situation where I got a stimulus check at that time. I shoveled that puppy straight into Bitcoin. Encourage clients to do something. Go ahead.
By the way, is what amount now? It's like 20,000.
Oh, geez. I haven't checked on it.
Yeah, it's like, I'll look it up while you're talking.
Okay.
There was a $1,200 check, and I want to say.
Yeah, I know mine was $1,400. So I don't know.
1,400. Okay.
And maybe the point I was getting to within that is when they inject, they have to choose how and who. And that's inherently an unfair process. In that month, they were buying Apple corporate bonds. There was the PPP loans for business owners. And then there were stimulus checks for, let's call them the plebs, right? The common folk. And it was just a whole set of rules that was created and then injected. And I think for the first time you saw when the new money units are injected into the lower socioeconomic ends of the population, that's where you're getting the grocery store inflation, right? If you just inject it into banks and Apple bonds, you're not going to see beef be affected as much as capital assets, right? And so I was paying attention to injection site, like, okay, they got to print new money. Where's it going to go? And that cancel-on effect is not, it's not a straight line, right? It filters and flows through over years, and it has ripple effects. And so the printing that got done was still under a Trump 1 administration, but then all this price inflation is like trickling through into the Biden administration, and people are like, oh, it's Biden's inflation. And it's just not intuitive to people that, okay, money gets injected 3 trillion one night. People didn't change the list price on their house the next morning, right? It takes years to trickle through, and it's not fair. You can't choose how it happens, and it is going to happen again. And so I guess the question I kind of want to ask you, like, how big do you think the next Federal Reserve balance sheet expansion is going to be?
Yeah. Your point on the frequency or the lag factor of the input versus the output is so on point and so important. It's so lost on so many.
Yeah.
By the way, the stimulus, if you got a $1,200 stimulus, it's now worth $12,000. It's 10x in value since they mailed those out. If you would have put it into Bitcoin. The way I would go about answering this would just be, look at the growth rate of the global M2. And, the US is printing at about 8 to 10% annualized, and it's been very flat for 3 or 4 years. So depending on, and this is another point on how much do they got to print. It depends on how much of that deflation of the credit, how much of that credit do they allow to be soaked up or to go poof, all the promises, how much of that do they allow to go poof, and for how deep do they allow that to go? Also plays into how much they've got to print in the immediate term to get it on track with that 8 to 10% growth rate.
Yeah.
So if they don't ever allow that impairment to really kind of play out in the credit markets, and they just continue to like juice it, then the print is just going to continue to take, whatever 8 to 10% of the current nominal growth rate is, and just figure that out. But if it contracts, like what we saw in 2020, that was really a sharp reaction to COVID. And so the amount that they put into the system was, I would say, a little bit extra than what they probably needed to. But I think that if you're looking at the speed at which
the speed, their responses become quicker. So TARP was what 08, and TARP was 3 months. COVID was like 3 weeks. Yeah. And then the banks breaking, I think they did that over a weekend, right? Like Silicon Valley Bank, and Oprah was broke on Friday and made whole on Monday.
That's a perfect example of why it's so hard to predict the next amount that's going to be printed, is because look at Silicon Valley Bank, perfect example. Died on a Friday, was reinvigorated before the market opened on Monday, and everything just kept chugging along. Yeah, it's like
nothing to see that weekend. Yeah,
nothing to see. But if they would have let that play out for, let's say they didn't do anything, they took their hands off the controls for 2 weeks, could you imagine the amount?
The dominoes would just start. Yeah.
The impairment would have just cascaded through the entire global economy, and then they would have had to have printed a lot more to offset that versus how they responded to it. So it's a little bit of a fool's errand to answer a question like that, because you just don't know how long they're going to allow the impairment to work out. But I think that if you're looking at it on a net long-term basis, like over, how much are they going to print in the next 5 years? I think you can actually figure that out pretty closely by just looking at the chart and just kind of doing the math of that growth rate. Now, whether this robotic stuff will accelerate the technology deflation, I don't know, but in AI, I don't know, but
and it's feedback loop too, right? The more they do, the more they have to do.
Big time.
Yeah. Who knows?
All right. So here's my question for you.
Okay.
What's the number one question that you hear? Because, with like ego death, when I'm talking to a LP, I can tell you the number one question I hear.
How do you outperform Bitcoin?
That is the question.
Yeah.
So what's your number one question you hear? You nailed that.
It's a twofold set of problems. So typically, I'll just tell you the typical is a husband and wife coming in. This isn't always, but the husband is more the technical Bitcoiner and very curious on if there's tax savings to be had, right? So tax is number one. That one's typically the primary technical Bitcoiner in the family wants to save money so they can buy more Bitcoin. The less technical spouse is looking at that guy and saying, well, what if I do if he smokes that, right? Like, I'm on board with the Bitcoin. I'm not involved in the finance, but if something happens to him, health, or otherwise, God forbid, I'm not confident that I know what to do or if I have someone to talk to. So it's twofold. It's like a tax and inheritance 1-2 punch. And then maybe a third as a backup is like, well, if we're right about Bitcoin, then I'm going to have a new set of opportunities or choices. So how do I like dial back maybe the work I'm doing or pivot it to something else? So can you save me money on taxes? Probably the number one question. And it's a deep and customized question. Inheritance is pretty standard, especially in couples, saying, I believe in my spouse and I'm on board with Bitcoin, but I'm not as technically confident, or no, I don't know I'm going to be okay if something happens. And then once those two are solved, we start looking at the future and what transition scenarios might look like. So I'd say that's the most classic.
Let's
problem
talk
set.
the tax piece, because and I know that you said this gets very nuanced to the individual, but if you would take, let's say you have a person, their net worth is $500,000, how would you walk them through the tax implications and how to think about it?
Yeah, so there's a couple different components to tax, and I'd say the two big ones that are just highly dependent on who you are and your financial situation is going to be income tax, right? I make money every year and have to pay taxes on it. And then estate tax, which is kind of the net worth one that you were poking at. I've got this much money, and the way the tax law is currently structured, if you die with too much, that's the death tax, right? It kicks into 40% really quickly. And so if death tax is in play, that's a huge needle mover. We're looking at hundreds of thousands, if not millions of dollars in tax savings. Bitcoiners are unique because even the person that's at a $500,000 net worth thinks they might be in some, measure of time, like, oh yeah, well, I'm going to the moon. And so I might have the death tax as a problem. So it's something we're always paying attention to, regardless of net worth. Right now, those numbers are about $14 million per person. So $28 million net worth for a couple. That's part of the Trump tax bill. That sunsets this year. If they don't change any rules, gets cut in half to 7 million per person. So coming down from 28 for a couple down to 14.
Yeah.
And just depending on the uniqueness of your situation, if you see a net worth and like those two, a perfect storm collides, like, well, I might be over 14. And if this sunsets, it's nuanced. It's a little bit complicated. And we're talking about two different structures that we can move the needle in. So when you present net worth, that makes me think, okay, well, which tax are we talking about, right? Is it, I pass away and I had too much money, so now I'm taxed and pay half to the government? That's a big one to avoid. The more common one, I think, that applies to everyone is income tax, right? I've got rental properties or W-2, or I sold a business. And that tax is experienced every year. You're not having the death tax every year, hopefully. And the income tax, it's a different one, a little more unique. I would say, if I could answer the question quickly for you and then kick it back to any follow-up, the three biggest needle movers we have as Bitcoiners within the income tax are going to be good understanding of your basis to do both gains and loss harvesting, right? In a pullback, you can do loss harvesting, but there's also gains harvesting. There's a 0% capital gains tax bracket. Some people live in 0% tax states. So if you can go get and sell a Bitcoin and pay no tax, sometimes you can do that and just buy it right back and give yourself a higher basis. So
let's understand where that would apply.
Okay. Yeah. So someone who is at $100,000 a year of income as a couple, right? Husband and wife make $100,000 a year, and they don't have any other complexity in their tax situation. The 0% capital gains rate goes up to about $130,000 for this year, 2025. I'm using round numbers here. It's a little more specific. But there's a situation, if that couple lives in one of the 9 states that have 0% tax, they can sell $30,000 worth of gain in Bitcoin and then buy that Bitcoin right back, right, in the very next second. That is a capital gains harvest. And they're not going to pick up any tax for doing that. They're still within the 0% federal window, 0% state. What they can do is sell, where are we at today? 85,000. So let's pick, they bought Bitcoin at 55,000. It's 85,000 today. And I sell the $55,000 Bitcoin, buy it back for 85,000. I've just improved my basis and future tax situation by that much for free. So that's one to pay attention to. And then I'd say the other two are going to be donor advised funds. So we have a lot of clients who are charitable. It's kind of this fix the money, fix the world idea. And we're often identifying their lowest basis Bitcoin and using that within their tax situation to get write-offs, right? You can front load that and they can continue to hold the Bitcoin. It doesn't have to go straight to charity. They just leave it in a structure where they can continue to hold it, let it grow, give it to a charity one day. So that's we've saved hundreds of thousands, if not millions of dollars by doing that for folks. And then the third one is going to be Roth conversions. Roth IRAs being tax-free. Bitcoiners love the idea of tax-free. And so if we can get Bitcoin into a structure that without tax law changes, by the time they want to use it, they can do it without having to pay taxes. That's a big one. So that is pretty nuanced in looking at the current bracket and how much can we get, from traditional to Roth IRAs, or we build a Roth IRA from scratch. But in general, those are the three quick answers of like real needle movers. There's other more peripheral ones, but tax gain, tax loss, donor advised funds, and charitable gifting, and then Roth conversions.
A lot of people hear about having their own trust. At what point would you start recommending this for somebody, a self-directed trust or self-directed IRA through a trust? Help us understand how you think through some of these mechanics.
Yeah. So there's a couple of nuances within there, and I want to be clear on what you're asking. Are you talking about trusts, which are typically more for like asset protection and don't necessarily need to be IRAs? And then there's IRAs. A subcategory of IRAs is like the self-directed, where a lot of early Bitcoiners had to use that structure to hold Bitcoin in an IRA. So
both of those. Sorry.
Okay.
Yeah.
Okay. So I think we'll do the IRAs one first, because early on in Bitcoin, there wasn't a great way to like hold your own keys for a Bitcoin and have it be tax advantaged. And so what happened is you'd set up what's called a checkbook IRA, right? It ends up being IRA owns this LLC, and then the LLC is a business and they can go hold Bitcoin on its balance sheet. And so people or Bitcoiners, to have key control, they do this checkbook IRA structure, or hey, I'm going to have the IRA. It's going to own the LLC. The LLC is going to go buy Bitcoin and I'll hold my keys in that. And I would say that's probably one of the earliest ways you saw Bitcoin in IRAs. Now there's far more products and options, right? Whether you would just want to be the ETF on Schwab or Fidelity. I helped develop when I was at Unchained for a few years. They have a 2 of 3 multi-sig IRA, right? Where the client's still holding 2 keys. Unchained holds the third. They use their third to keep you compliant from a reporting perspective. So because they have a key in the setup, they can watch if the Bitcoin ever leaves. That's the mechanism they use to keep you compliant. And so there's far more options now. And I think it's rare for me to see a checkbook IRA, but they still do exist. Like anything, there's trade-offs to each structure. So I don't want to rabbit trail too much on that one.
And then how about just a trust in general?
Trusts can hold assets, wills cannot, right? So when you look at doing your estate plan, you say, hey, I want my kids to be taken care of by, Grandma Susie, and I want the dog to be taken care of by someone else because she does, you can do everything you want within a will, but a will can't hold Bitcoin for you. When assets are transferring to inheritors, you often want to trust, and this is a 50 statewide question. I'm not an attorney. Attorneys have to write trusts. But I'll brainstorm this with clients, because the 3 big things that Bitcoiners don't like when they hear what I'm about to say is the state can be involved with how your assets are transferring to your heirs if you don't have that set up. So if you've got Bitcoin and you bought it in Preston's name, right? I'm Preston. I bought Bitcoin. Something happens to Preston and that Bitcoin is supposed to go to your wife. Depending on how you're set up, the state you live in could be involved. That is a process called probate. It's often very slow, can be expensive. And the big one that Bitcoiners don't like is its public record. Hey, Preston's wife got this many Bitcoin on this day. That's an avoidable situation. And so a trust is that mechanism that can hold assets. I'm Preston. I'm going to set up a trust. My wife is going to be a co-trustee to that trust, and we are going to put the Bitcoin from my Preston name into the trust. That is a non-taxable event. Now the trust owns the Bitcoin, and there's still key control, structures available to do that. Then if something happens to you, your wife is just the co-trustee the next day. It's not going through the state. No one needs to know. It's next day access, and it really keeps her above board, right? She doesn't have to document, well, how'd you get this Bitcoin? She's able to find your keys, like in a single signature setup, right? Hey, that's unfortunate. Preston passed, but I got the keys. She's going to bring that into a financial service at one point to sell it or take a loan against it. And they might, ask, well, how'd you get this? And you can save a lot of that pain up front by just hey, let's title this correctly. We don't have to make sacrifices in our key control setup. We just need a good legal wrapper around this to avoid really the state getting involved and having their say.
Yeah. At what net worth, or like what would be the metrics that you would tell somebody?
That's common. I don't think that one's tied to net worth at all. So that situation we described is called like revocable living trust.
Yeah.
Revocable meaning I can take it back as long as I'm living, right? And so revocable living trust, often called a family trust, you can put assets into it, take it back out. That is something that everyone should consider currently, regardless of net worth. I would say some of the more automated LegalZoom type options can be a few $100. Meeting with an attorney is probably between $3,000 and $10,000 to get it done. And you're getting your basic set of documents taken care of that you can still make changes to.
Mm-hmm.
And so that one, in my opinion, doesn't have a net worth trigger like some of the more advanced trusts do. The more advanced trusts are called irrevocable, which means no takebacks. And the big reason you're doing that is for asset protection or to avoid that death tax that we talked about earlier. Like, hey, I'm over that 14 or 28 million. Let me use that number now and get the Bitcoin out of my estate into this trust that I no longer control.
Mm-hmm.
And so you set up that type of trust with a lot more intentionality and due diligence. And you're usually not exploring that until you're on the bubble, right? The 14 or 28 or whatever it decides to be next year.
Yeah. One of the most common questions I get from family and friends is, Preston, where do you personally buy your Bitcoin from? And the answer is really simple. I buy it on river.com. Not only can you buy Bitcoin with zero fees on recurring buys, but you can earn Bitcoin interest daily on cash balances while waiting for good buying opportunities. And over the past 2 years, these returns have been twice that of most high-yield savings accounts and 16 times the national average, making it a powerful way to grow your holdings. You also have peace of mind knowing Bitcoin on River is held in multi-sig cold storage, fully licensed and regulated in the United States. Plus, their relationship managers are US-based and available by phone for you or your business. Additionally, River has built its own infrastructure from the ground up, meaning it doesn't rely on third parties to function, like a lot of other Bitcoin exchanges. River is setting a new standard in Bitcoin investing. Go to river.com/fundamentals to get up to $100 free when you sign up and buy Bitcoin. That's river.com/fundamentals.
Holding Bitcoin is the best way to protect your family from the threat of fiat currency collapse. And few people understand this better than Tony Yazbek, cybersecurity expert and founder of the Bitcoin Way. Tony was in Lebanon when the currency imploded. He's seen the chaos that erupts when the ATMs stop working and the bank accounts get frozen. He knows what it's like to lose everything. But with his cybersecurity expertise and by fully adopting Bitcoin, Tony was able to engineer his escape. And now Tony and the Bitcoin Way team work to make sure this never happens to you. With over 25 years of experience, their expert training empowers you to self-custody your family's Bitcoin the right way, secure your devices and protect your privacy, develop robust inheritance plans, and secure for Plan B citizenship. The Bitcoin Way can transform you into a sovereign individual. You just need to take the first step. Schedule a free consultation today at thebitcoinway.com/TIP.
Let's talk the technical risks that you said come up in, these initial meet and greets that you have. That one of the two bring up that they have concerns if the other one passes to be able to manage the keys. How do you go through this? I mean, when I'm thinking about this, I think about on one extreme you have like my grandmother. There's no way she could ever do anything with Bitcoin keys without having somebody do all of it on her behalf.
Yeah.
And so, buying something like an ETF for somebody of that technical competence seems to make more sense. And I know that that's not a popular thing to say in the space. How do you go about
it? Might not be popular, but I think it's right. Take everyone for where they're at and try to get them the best thing that fits them. So, unfortunately, we had a client pass last year in his 80s and surviving spouse is in her 70s. He was holding his own keys. She doesn't want to have anything to do with that. And so in some ways, we have to ask the question, like, is quote unquote going backwards the right step, right? We were holding keys and now, but she's very nervous and it's tough for her to feel comfortable with, she likes Bitcoin. Her husband believed in it. She feels this urge to carry on, in his name with the asset, but maybe the ETF is a better fit for now, or at least we can choose a little bit of each, right? And we just have those discussions and figure out what might be right. As far as ETFs go, it's common for us to divide amongst the custodians. Coinbase, Honeypot, I think they're helping out 8 or 9 of the ETFs. Fidelity runs their own custody, and then Gemini runs Van Eck. So if we use ETFs, like, hey, let's maybe spread across these custodians to diversify against a hack.
Yeah, what are your thoughts on the Coinbase quote unquote honeypot?
They hold a lot of ETF coins.
Yeah.
I think there are a lot of MicroStrategies coins. I don't know where America's going to hold its coins. Within that summit that we went to in Jackson, I heard them called the gold standard for Bitcoin custody. And we'll just call them Bitcoiners on the street. It's like, it's not the gold standard of how many Bitcoin maximalists would trust Brian Armstrong with their private keys. It's like, I don't know, not a high percentage.
Yeah.
And so that looks like a big risk to me. And I have Bitcoiners, don't say that, don't jinx it. We saw Mt. Gox, like we've seen FTX, like we're looking at what a honeypot could be. They're holding between those 3 entities, it's over 1.5 million Bitcoin, somewhere around there. The ETFs, MicroStrategy, and potentially America. I don't know. And so I'd like to see coins leave Coinbase slowly rather than all at once, right?
Yeah.
If 1 million Bitcoin leave in a night, that's a bad year, potentially decade for Bitcoin. If we can have better custody options develop and be adopted over 10 years, and Coinbase doesn't have to have a catastrophic event, that would be a preferable outcome, I think.
I think the SAB 121 and this request for in-kind redemption is all a positive direction to remedy some of this, what you're talking about. Just don't know the pace at which.
Yeah, because that would allow banks to be like, hey, we're going to redeem the ETF at Coinbase, but then they still have to come up with their key control model, right? What does Chase Bank running cold storage multi-sig look like? I don't know. How much work have they done from that perspective to make sure that that's secure? So I'd like to see maturity in the industry. Competitors develop SAB 121 or in-kind redemptions would help make it easy to transfer some of the ETF coins elsewhere.
Yeah. You had mentioned that the third thing that sometimes comes up is this discussion around like, well, what do we do if we're right?
I don't know.
No, it's more like a philosophical discussion with, purpose. And I'm just kind of curious to hear your thoughts on some of that. Like, hey, we're 10, 15, 20 years into the future. Let's say you're very right about all of this and it changes your life. Like, for some people.
So I get to see it, right? I've worked with clients who started in 2012, 2013, and exactly that happened, right? This used to be a nominal amount, and now it's grown into a life-changing amount. And what if that happens again? So what I've already seen, if it compounds, right, and we're folding the paper in it, you're going to be presented with opportunities that you've never seen before, and simultaneously problems that you've never encountered before, right? For a lot of people, like, I didn't know a death tax kicks in at $28 million. So I encourage them, hey, do your moon math and, figure out when this matters to you. I've seen some Bitcoiners like, well, my answer is to just go underground. I'm going to do the no KYC thing and I'll, make my family go dark for generations, right? Okay. Or with some planning and intentionality, you can choose to stay above board and just have good structures and a strategy in place. So it being exponential, and if you're right, in 10, 15, 20 years, you're presented all this new opportunity from a time and energy perspective, like how you make work optional and what you focus on, what matters to you. I do see a trend of let's fix the money, fix the world. As Bitcoin has happened to people, it unlocks that fix the world side of them, and they start caring about causes and want to use their Bitcoin for that. So that's exciting to partner with. And then, just the problems that wealth brings. I've got to meet, in my opinion, some very, very wealthy people on this journey, and they're not problem free. They just have different money problems. So it's a fun job getting to see the whole spectrum, right?
Yeah.
Those early in the journey and ones that it's already happened to.
What would
Different
be
strokes for different folks, though.
what would you say is the one bit of advice you'd like to leave with the listener as they think through some of these things?
I think the biggest piece of advice is your situation is not like anybody else's. I'll bring Sailor back into this because another common question, I guess, I'm told to never sell my Bitcoin, right? Michael Saylor said to never sell my Bitcoin. Michael Saylor is getting 0% debt and arbitraging a convertible bond market that we have no access to, right? And so he's playing a different game and his needs are going to be met incidentally, like they're a rounding error of his life, right? He's operating in a different threshold. So don't play somebody else's game.
Yeah.
You go on Twitter and you see all this advice, right? Do this, this, and this. It's often someone speaking from like, hey, here's the game I'm playing and how I want, I'm a revolutionary. I'm going to die on this hill and I'm never selling my Bitcoin.
Yeah.
Talk to a 62-year-old couple, they're retiring, and are they in that same spot, right? Are they a revolutionary? No, they're not going to work and they want to have a calmer experience than what Bitcoin volatility has traditionally brought most folks. And so it can be tough, especially within, if we are in an echo chamber, right? And we're saying those words to ourselves, you can get caught up playing somebody else's game. And you think you're making good financial decisions because that's what a community or a signal could be telling you. But they're not playing your game. They don't know who you are. They don't know if you have a wife or kids or, what your job looks like or that you just sold your business and you've got to pay a bunch of taxes. They don't know any of that. And so only you are in your shoes. You can reach out to people that work on this. Like that's why we build Sound Advisory. I got the question all the time at Unchained. I said, what should I do? Oh, I can't say should, right? You hear it all the time in every podcast. Not financial advice. Go talk to your guy. There weren't many good guys or people in the space that could answer that question for folks. And so that's what we look to do is just be a sounding board, understand Bitcoin deeply and try to give advice that makes sense for Bitcoiners and like be a partner with them in the game that they're playing.
Yeah. I love this advice. I love this advice because you see it on Twitter or X all the time where people are actually like getting in fights and arguments. No, that's not how, and it's like, no, everybody has a different circumstance that they're dealing with. And I just really like that point a lot. You mined a little bit for 3 years. I'm curious what your takeaway, like looking back at the experience, what was your takeaway with mining for 3 years on your own?
So I mine out of my garage and heat my house. Like, so in the winter, or I think we kick it on around October, and I just, above the fridge, popped a vent through the garage and then just pump it out into the entryway. I live in Idaho, so it's cold, right? Often be like single digits or the teens. And so we just keep it on all winter. Not an advanced setup, but it was heating the house for about $8 a day electricity. And at the time, maybe making $6 to $7 a day in Bitcoin. So more of a nerd hobby, but fun. And I see the conversation starting around heat reuse, right? And for so many of these mega scale miners, they're looking for cheap electricity costs and then doing just massive scale, right? And a lot of heat is the output and it's valuable. And I saw that just personally. I'm like, I could either run the heat pump, which is really expensive and doesn't make Bitcoin, or can run the miner and like get some Bitcoin alongside. And so it's just completely on grid. We weren't getting any sort of special rate or anything, but I'm very encouraged to see, you've seen the prototypes of like the hot tub, right? We're going to heat the hot tub with Bitcoin. And talking to another Idahoan locally, he's like, I want to heat my driveway and I want to heat my pool. And, if it makes Bitcoin, all the better. And that energy that's changed from electricity into heat is often being wasted by miners, and it could be injected into so many homes, right? Water heaters. There's just a deep need for heat. I was chatting with someone on a plane who got Bitcoin a little bit. I'm like, it's very, very curious to see like miners migrate in winter. Like they go from North America to South America for the winter, just because that's where the heat is needed. I don't know if that'll happen, but yeah, there was a joke there with chickens and egg six, and it was a good joke, right? Like maybe we'll see miner migration if he becomes more valuable, but
if you could look at it objectively from the typical person that's wanting to do this at their house and the technical competence required and the operational and maintenance, like you just told me before we started recording that you were on, quite a few trips in the past 3 weeks and being away from that. How likely do you think something like this coming into the home is, and like what kind of timeline do you think something like that might, occur?
Oh goodness. If they built, so I've seen like the heat bits and, there's an industry that's poking at the user interface of it all, like making that easier. It wasn't too difficult. Like I am not an electrician or an engineer. I don't know how to code at all. And I just opened up my panel, ran a wire over, plugged it in. And so I was able to jerry rig it.
Yeah.
I'm confident that others could, but I think the industry making it plug and play is just, that's a curiosity. I think I have that. Okay, well, what if you could just buy a water heater at Home Depot that has ASICs using to heat the water?
Yeah.
Have it all point to an address or a wallet, and it's not too difficult, and your water heater goes out. It's like, are you going to buy the one that mines Bitcoin or doesn't? They cost the same, you're going to choose the one. And I think that'll just start to infect the need for heat market.
Yeah.
So, yeah.
It's exciting to just see the potential, but yeah.
Yeah.
Jessy, if people want to learn more about you or Sound Advisory, give them a handoff.
Yep. So we can be found at thesoundadvisory.com. So that's THE Sound Advisory. You can book an intro with our team. We're 3 advisors, 2 CPAs doing taxes in-house for folks. I'm at Idaho Hodl on Twitter. And then other folks on the team. So Vaughn, Kellerman, Malcolm, I'm sure any of them would be happy to have a follow. So reach out, say hi. If you've got questions, that's what we're here for.
All right. We'll have links to all this in the show notes. And until next time, hopefully we can be as lucky as we were this past time in Jackson, not killing ourselves on the slopes. But boy, I had a blast with you, sir. So thank you for making time and coming on the show.
Yeah, thank you for having me. It's an honor.
The United States has a strategic fund of Bitcoin. That narrative is incredibly valuable. We got Bitcoin that's sitting on their books, right? That is already appreciated, a lot of it that has been seized. And you're going to tell you, we're not going to sell this into the market. We're just going to hold it. That's massively bullish.